I'm not sure if that my mic just buzzed for a second. I'm not sure if that picked up, but sorry if it did and it was loud. July 1st, 2025. Obviously, I'm starting the review a little bit early. I usually do nowadays as I do not trade past bar 65. And obviously, I do not trade before bar 7. So, coming into the day, obviously, this is a late leg, bar 77, but I thought 77 might be a potential magnet. We had three legs up, one pullback, two pullback, three. So not really great to be buying anywhere up in here. This is probably more of the sell zone. 11 and 12 are pretty strong, but the channel up is decently tight, so you should expect there to be sellers at the 10 low, the breakout point. Since we have a breakout and follow through, again, expected to get a second leg, but big piece of trading is learning where the second leg is. Pretty much all of trading is learning where the second leg is going to occur and the probability of another leg down. 15, a strong bear bar with a decent close. I did sell the close of 15. It's leg 2, so I try to avoid trading leg 3. We are low in a trading range, so trading leg 2 might not be all that great, but I thought it was okay enough, so I did sell the close of 15, and I was looking to scale in. I believe one of my scale-ins got filled on 18. I sold more on 16 on the immediate follow-through, and I believe one of my scale-ins got filled on 18. So one of my rules is when I get three legs down and a big reversal against me, one of my definitions of a surprise, I just got to get out. I did think we would get below the 16 low because of the 4 consecutive bull bars. Odds are, high probability we're going to get back down here. But after three legs down in a big bull bar, I'm going to get out. So I did get out on 19, which is fine. That's, it's what my rule set says to do. So, oh well, took a small loss on that one. It was more of an average size loss. It wasn't necessarily a tiny loss, very average size loss. 20 and 21, good consecutive bear bars, but it's like 4. 1, pullback 2, pullback 3, pullback 4. So not really all that interested in selling like 4, even if it gets follow through. 22, 23, 24 is one of the better micro channels I have seen in a while. I did buy the close of 24 and I added on the close of 25 and I scaled in all the way down. Unfortunately, 26 isn't that big of an issue. I don't really have a problem with 26. It closes like a little bit stronger than I'd like to see. But if it was going to be a big problem bar, it would have closed somewhere down here, retracing maybe 50% of the range. So for me, 26 isn't the worst bar in the world, but I want to see 27 be a bull bar. I don't want to see this get follow through. When it did get follow through, first off, there's still a high probability that we're going above the 25 high. This should still get a second leg. It's a very, very high probability trade. And it's leg 1. It's a clear leg 1 with that got follow through in a strong 3-bar micro channel. So I did take the break even exit, the half an hour exit right here during 29. I wasn't super happy about it because I still thought there was a high probability that we get somewhere up here. But, in my rule set, if we get a reversal that gets follow through, I need to get out at that half an hour, especially if that's the start of the pullback. I just have to get out. I ended up, the nice thing about it, so to speak, is that when you have consecutive bull bars like this, when you're exiting on the second bull bar, at least per what I'm doing, if it's going to reverse down, then I'm not going to get another signal. And if it is not going to reverse down, then I am going to get another signal. So I exited here and then I bought my position back. I bought a smaller position back because I needed to scale in, but I did buy my position back on the close of 30. So I basically exited and then bought it back at the same price a bar later. And one of my scale-ins got filled on 31 and I got the symmetrical second leg up. Oh, let me do this. So I got filled around here. I still thought high probability we get one tick above 24, and I thought 24 is a really good 3-bar micro channel. So I did consider holding for the target up here, and if we got any sort of reversal down, then I was going to get out. Would have gotten an extra 5 points, but not really something I'm going to do right now. The reason I'm not really allowing any discretion in my system, well, there are spots of discretion actually. It's important to identify the spots of discretion. I'll read them to you in a second here, but they're basically leg counting is a big one. Let me scroll. I know this. The second one is identifying a reversal. I have specific definitions for 1 and 3-bar and 4-bar, obviously micro channels against me, but 1-bar micro channels or 2-bar micro channels, something like this against 2-bar micro channels, breakouts and follow through against me are another piece of discretion in my system, and then that's pretty much it. And just obviously I have to, do out the at least 10 plus 2 on all the 3-bar micro channels, but pretty much the leg counting and the reversal and follow through against me, or breakout and follow through against me, are the only spots where I need to be able to accurately see something in real time that I can't just, blindly run with numbers. And the other thing is, my numbers are not as good as what my system says they should be, as what my back testing says. And so until I can get them at least very close to that, there's no reason for me to be adding any more discretion into a system, because I can't even perform it perfectly without the discretion. So how on earth am I going to perform it perfectly with discretion? So that's another thing. But anyways, I took 30, got symmetrical second leg. This put me at basically break even on the day. I'll tell you now, I did not take another trade in the day. So I ended up today essentially break even. 34, 35, and 36. It does get a symmetrical second leg on the first move down. You can see it gets within 2 ticks of it. And getting within 2 ticks qualifies as my definition of a symmetrical second leg. I didn't take this because of this channel. I'm trying to avoid trading against parabolic wedges and tight channels. I made a video on that, but that's where a lot of the losses occur when you're trading against a parabolic wedge and when you're trading in late legs. That's when I have the exact number. It's important. I'll grab it. I believe it's 78%. Yeah, 78% of losses in the 3-bar micro channel, of all of the losses that occur, are either in late legs or trading against parabolic wedges. So I'm definitely, psyching myself out a little bit too much with staying out against anything against the regime. Like, this is a good trade, 43 yesterday. This is not a parabolic wedge, but I was just getting a little too jumpy because of the fact that I know that a lot of the losses occur against parabolic wedges, and obviously most of the rest of them in late legs. The other things were, there's a couple examples of buying the tops of trading ranges. And then what was the other situation? That accounted for like 90% of them. There was some other situation that accounted for the rest of the losses. But basically, if you're going to take very, 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 very few losses, if you can focus on not trading against parabolic wedges and not trading late legs, you're going to avoid the vast majority of losses in the 3-bar micro channel. So you can see you do get a second leg down, but it's not really that good. 37 is a strong bar, so the odds are there's buyers below. It is a high 1, but this is a 3-bar micro channel. So again, you'd expect another leg down from the high 1, and then you get buyers below and a reversal up. 40 and 41 consecutive bull bars, good for the bulls. But this is a late leg, so not really that great. We have basically 4 legs up, and the bulls need a breakout above all these highs, and you do not get a breakout on 41, and you have a big reversal down on 42. I thought 42 was a pretty good sell. I didn't sell it, obviously, but I thought I don't have any problem with selling 42, expecting another leg down. I think 43, 44, and 45 are a surprise. Should you have sold 42? I think getting out above 44 makes a lot of sense. I did not buy 45 after 42. That 42 is too big of a bar, and there's way too much risk of a really deep pullback. It's just too strong of a bar for me to be buying 45. I also think that 45 is a late leg. So I was looking at this as a late leg, and I thought 42 was really strong. So those things combined, I did not end up taking the trade. 46, 47, and 48 are interesting because now this is 6 consecutive bull bars. So odds are we're going to go higher. I could have bought during 49 or bought the close of 49. I was staring at it, and I decided not to because it would be trading a late leg, and I'm trying not to trade the late legs. But I thought it was reasonable to buy the close of 49 for sure. I mean, it's a 6-bar micro channel, so you can only go so wrong buying 6-bar micro channels. I don't know where this is going, 66, 67. I would imagine the traders who sold the close of 21, even though they sold a late leg, it's not the worst thing in the world to do. So especially if 67 closes strong, the Bears want to get a vacuum test down here. We'll see if they get it, but I wouldn't be surprised if we get a 3-bar micro channel here. But anyways, then we got basically late legs and sideways. So I ended up, it was worse than break even, but it was borderline break even on the day. As far as how did I execute compared, this is the really important thing because I said to you guys, my numbers are worse than what my system says they should be. So what I'm really focused on is if I were to go back and test this day, did I do the things that I think I would do, essentially, right? And I would take 15 for sure. I'd take 24, and I'd most likely get out break even and then take 30. I I think it's okay to sit at a 36, and I don't think I'd take 45 either if I was back testing. So I'm pretty okay with everything, I did or essentially didn't do. So maybe I would have said I'd buy 45, but I don't think so. It's a late leg. When in doubt, if it's a winner, I just tried not to mark it to try and make my numbers as bulletproof as possible, if that makes any sense. As far as the daily chart, you know, I said when we were over here that if we were going to break out above the bull channel, it was going to be really, really strong. And, you can see it was really, really strong. We had a 3-bar micro channel and it's getting a lot of follow through. So good for the bulls. The weekly chart, a large bull bar. Probably, this is again a very climactic bar and we have a bunch of legs up, but it's been a small pullback bull trend with 1-bar pullbacks for a little while now. So we'll see where this ends up going. Again, I'm not, this is a breakout above the all-time high. The bulls want to get a bunch of follow through, above 6,300, maybe up to 6,500. We'll see if they get it. But the close of this bar is important. It doesn't look like it's all that big. So if you bought the close of last week, you probably wanted to see a big follow through bar, and you do not have that right now. So we'll see how that ends up going. But all right, that's going to be it.